Now I'm going to learn about analysis of long-term asset and topics in long-term liability and equity. So just talking about long-term stuff like asset and equity and liability. So yeah, let's just start. I have no copy with me because I don't have ice. Copy without ice is like human without water, I guess. So yeah, let's start. Timer on, everything is prepared, so let's go. AI, this is AI, right? I'm pretty sure that. Okay. Yeah, all music is AI generated original content. Yeah. Let's start with analysis of long-term asset. I'm just gonna skim through the material. Intangible asset evaluation, long-lived assets, long-term asset disclosure, SGAP, topic long-term liabilities and equity.
assets instead. Non-current assets are long-term or has value, something along those lines. And that's not far from the truth, although the definition of assets in accounting is a bit more specific. Assets are probable future economic benefits obtained or controlled by a particular entity as a result of past transactions or events. Say what? I know. What on earth does that mean? Let's break the definition down and try to make some sense of it. The first word that stands out to me is probable. Assets are probable future economic benefits. The word probable carries with it a degree of uncertainty, and I want to emphasize this because I think that often we take numbers for granted without questioning them. The reality is that the future is uncertain, and a lot of the time we accountants have to make estimates. Let me give you an example. If you're running a business and you've got 10 clients who all owe you money, can you say, hand on heart, that you'll receive back every penny? It's not uncommon for customers to go bankrupt or to dispute invoices after the work is done. So what accountants do in these situations is make an allowance for doubtful debts. We estimate what might not be recovered and expense it to provide for situations where there's uncertainty. And that brings me on to the next part of the definition. Assets are probable future economic benefits. What are future economic benefits? These are the things that bring value to you or your business either directly or indirectly. Valuing assets based on future economic benefit means we can't simply hold them in the books at the value that they originally cost us. Imagine you buy a laptop today and you plan on keeping it and using it entirely for work. Will that same laptop carry the same future economic benefits in 5 years' time? Probably not. You might well have taxed it by then and not be worth anything anymore. It can be hard to measure the lifespan of a laptop. So instead, we assume that all laptops have a useful economic life of, say, 5 years. Useful economic life is a term that you'll hear often when talking about assets. It's how long controlled. This highlights another important concept that we use in accounting called substance over form. This means that when preparing financial statements, we prioritize the economic substance of transactions over their legal form. An example of this is when a business rents a building for a long period of time, say 60 years, and that building's remaining useful economic life is 65 years. Although the business is considered a lessee and technically doesn't own the building, the economic reality of the situation is that basically they do. Make sense? Because they have the right to use it for the majority of its remaining useful economic life. Following this principle of substance over form, we can account for this building as an asset, even though legally it isn't. That has big implications for the accounting and tax treatment of the building. Now, I'm oversimplifying the situation. There are a few other factors to consider when making this call, but that's the gist of it. Okay, so now we know what an asset is. Let's run through some examples of common assets that you should know about. But first, and bear with me here, a balance sheet is a snapshot of a business's assets, liabilities, and equity at a single point in time. In the asset section of a balance sheet, we list out all of the different types of assets that a business owns or controls. These assets are often arranged in order of liquidity. But what is liquidity? You can think of it as how quickly you can turn an asset into cash. And following that vein of thought, assets in the balance sheet can be divided into two distinct categories: current assets and non-current assets. Current assets are the ones that we can convert into cash in a short period of time, typically within a year. The three types of current assets that show up most often are cash, accounts receivable, and inventory. Inventory is your physical stock, or the goods that you intend to sell to make a profit. When your business sells inventory, your customers owe you money, which we call accounts receivable. And when your customers actually pay you, your accounts receivable turn into cash, the most liquid asset of them all. Other current assets include prepayments and short-term investments. You can think of prepayments as situations when you're paying for something in advance. Rent is a good example because most of us pay rent at the start of the month. At the moment that rental payment is made, we need to recognize a prepayment as an asset in the balance sheet. It's an asset, even though we aren't going to convert it into cash, because we're going to get some of that sweet future economic benefit out of it. Remember the definition? Not all assets convert into cash. Short-term investments can be made when your business has cash to spare. You might choose to put some of that money to work by investing it in stocks and shares. This investment is considered to be a short-term investment or current asset if you're in it for the short game and you plan to sell those stocks or shares within a year's time. However, if you want to hold on to them for longer than a year, they become non-current assets instead. Non-current assets are long-term assets that are used in operations to generate profits and that can't easily be converted into cash. There are three main categories of non-current assets. The first, which we touched on a moment ago, are long-term investments. These are the investments that we plan to hold on to for longer than a year. The other two categories of non-current assets are tangible or intangible assets. Tangible or fixed assets. These are the investments that we plan to hold on to for longer than a year. The other two categories of non-current assets are tangible or intangible assets. Tangible or fixed assets are the ones that have an actual physical presence. You can actually touch them. The most common types are land and buildings, or PPE, which stands for property, plant, and equipment. These include things like furniture, machinery, and cars. But not all assets have a physical presence. We call those that don't intangible assets. Intangible assets include things like intellectual property, patents, royalty rights, trademarks, and copyright. If you're a photographer, then you might own the royalty rights to some of your own photos. If a company wants to use one of your images for their website or blog, they should pay you a royalty fee to recognize your work. So this intellectual property that you own is bringing you probable future economic benefit. It should be an asset, right? The answer is sometimes. The thing with intangible assets is that they can be very difficult to value. How can you calculate the future economic value of your own licensed photos? You can't really. So most of the time, businesses don't capitalize intangible assets that they've generated internally. What does capitalize mean? When we capitalize something, we record it as an asset in the balance sheet as opposed to expensing it in the income statement. We only capitalize intangible assets that we purchase from someone else, and these are held at the cost value that we paid for those assets, or a lower amount because we amortize intangible assets to decrease their value over time, much like we depreciate fixed assets. An intangible asset that doesn't fit into the category of intellectual property is goodwill. Goodwill is the amount that one company is prepared to pay for another, over and above the fair value of its net assets. When Facebook bought Instagram back in 2012 for something stupid like $1 billion, were Instagram's net assets at the time worth that much? Not by a long shot. The majority of that purchase was for goodwill. That's the premium that Facebook were happy to pay for Instagram's brand and potential future earnings, over and above the fair value of their net assets. Thanks for watching. If you found this video useful, give it a like, share it, comment, subscribe if you haven't already.
I think we learned about tangible and intangible asset, and also goodwill as well, which is also I think mentioned on the slide as well. But I want to learn about tangible and intangible because I feel like I zone out a little bit there.
These are the investments we plan to hold on to for longer than a year. The other two categories of non-current assets are tangible or intangible assets. Tangible or fixed assets are the ones that have an actual physical presence. You can actually touch them. The most common types are land and buildings, or PPE, which stands for property, plant, and equipment. These include things like furniture, machinery, and cars. But not all assets have a physical presence. We call those that don't intangible assets. Intangible assets include things like intellectual property, patents, royalty rights, trademarks, and copyright. If you're a photographer, then you might own royalty rights to some of your own photos. If a company wants to use one of your images for their website or blog, they should pay you a royalty fee to recognize your work. So this intellectual property that you own is bringing you probable future economic benefit. It should be an asset, right? The answer is sometimes. The thing with intangible assets is that they can be very difficult to value. How can you calculate the future economic value of your own licensed photos? You can't really. So most of the time, businesses don't capitalize intangible assets that they've generated internally. What does capitalize mean? When we capitalize something, we record it as an asset in the balance sheet as opposed to expensing it in the income statement. We only capitalize intangible assets that we purchase from someone else, and these are held at the cost value that we paid for those assets, or a lower amount because we amortize intangible assets to decrease their value over time, much like we depreciate fixed assets. An intangible asset that doesn't fit into the category of intellectual property is goodwill. Goodwill is the amount that one company
It's done. Let's go. I'm gonna read the PowerPoint now. We talk about intangible asset. Compare the financial reporting for the following types of intangible asset: purchase, internally developed, and acquired in business combination. I think there's also like 3 types of different stuff, which is purchase, intangible assets like physical substance such as patents, brand names, copyright, and franchises. And also this is an example of non-current asset, which means it usually more than 1 year in value is okay. Identifiable intangible can be separated from the firm, controlled by the firm, expected to provide future benefits that are probable, and whose costs can reliably be measured. Can be purchased separately and may have indefinite lifestyle, like okay, goodwill. Unidentified. Okay, finite lived intangibles, e.g. patents, like amortize over their useful life, amortized based on consumption of benefit, straight line, accelerated, or units of production. Indefinitely lived intangible, like goodwill and brand, not amortized but tested for impairment. Not amortized but tested for impairment annually. Amortization is the process of spreading the cost of intangible asset over its useful life. For example, if you have a patent expired in 10 years of valid lifetime intangible, you divide the cost by 10 years and take a small expense every year. However, for indefinite lived intangible, like a powerful brand name or goodwill, the company expects to receive benefit from the asset forever or for an unknown period of time. Mathematically, you cannot divide cost by an indefinite number of years. Therefore, the asset stays on the balance sheet at its original cost forever, unless something goes wrong. Why taxes for impairment annually? Because the company is not gradually reducing the asset value through amortization, there is a risk that the asset on the balance sheet is worth much more than is actually market reality. To prevent this accounting rule, both IFRS and USGAAP require annual impairment tests. To check once a year, management must look at the asset and ask, is this worth at least what we say it is on our books? If the receivable account, the value it could be sold for, or the value of its future cash flow drop below the book value, the asset is considered impaired. The company must immediately write down the asset to its new lower value and record loss on income statement. on the balance sheet. A loss must be recognized. So non-cash loss of 300 is recorded, which reduces net income. Balance sheet impact, the assets were down 700. This is a favorite topic of CFA exam. If the asset value recover, allow the company to reverse the impairment loss, the asset will turn back up to $900, and again is recovered in the income statement. Wait, is in the income statement? I thought it was on the balance sheet. But okay. Reversal of impairment loss for held for use assets are strictly prohibited. Even if the brand becomes world famous again, it stays stuck at the impairment value of 700 on the balance sheet until it's sold or abandoned. As an analyst, when you see indefinite-lived asset on the balance sheet, assets are lumpy, expect zero impact on earnings for years, followed by a potential massive one-time hit to the income statement if impairment is triggered. Artificially high ratio, because there is no annual amortization, the total asset denominator stay high, which may make asset turnover, revenue to total asset, look lower than the company. Okay. Intangible asset. Internally developed intangible asset expenses. Nah, this is what I want to learn. Internally developed intangible expense. IFRS research costs are expensed as incurred, but development costs may be capitalized. Okay. So research, I'm just gonna make my own table, IFRS and US GAAP. It's gonna be research development. So in IFRS, research is expense, and the development is may be capitalized. Under US GAAP, research and development costs are expense as incurred. Okay, so it's expense. Software development cost, software development for sale. Software development cost, software development for sale, IFRS expense. For sale, software development for internal use. Okay. For judgment. Expense as incurred until technological feasibility is reached. Thereafter,
短い満足だけが緩やかに続いていく指先の停留 staying low 曇ったルシが drifting slow 言葉を持たない tiny ease 視線の先で settle in peace 指先の停留 barely bright 悲しと surface late in light 誰にもわたらない small delight そのままそこに rest tonight yeah 閉じかけた冊子エッジの端親指だけに残る髪の乾き薄い物腰伝わる平熱座面の傾きが妙にちょうどいいコードの癖が描く曲がり方床沿いに続く鈍い線使い切らないまま伏せた文具置き場所だけで整って見える細い湯飲みの底わずかな重み口をつけずに過ぎた数フォント棚を戻す控えめな響き狭い台所で程よく止まる放送を剥がした透明の端まるまるショーツがまだ残ってる完璧じゃない散らばり具合がむしろ今日にはよく馴染んでいた指先の停留 staying low 曇ったルシが drifting slow 言葉を持たない tiny ease 視線の先で settle in peace 指先の停留 barely bright 悲しと surface late in light 誰にもわたらない small delight そのままそこに rest tonightとどめずに置いた紙とどめ一つ付け下で触れた網目の感触名前をつけないままの快さがこの数秒へ静かに集まっている揃えないことが落ち着きになるそんな並びがここにはある何かを足さずに終わる時間が思った以上に深く残っていく小箱の蓋が閉じる音だけ薄く沈んでいく使わなかったものたちが静かにそこへとどまっている丸いその癖 leaning slow 片側だけに evening glow 短い沈黙 stays in place 目立たぬまんまの private grace 丸いその癖 holding still 少し斜めの window chill 言い切らないで left behind small comfort resting in the mind 冷めの円に残る薄いスレ回るたびに変わる向き台所脇の狭い通路で何度も同じ位置に戻ってくる湯切りの後猿の鐘網水滴の抜ける短い間単板の角へ寄せた小皿重ならないまま静かに並ぶ紙パックを畳むにボイオレオと切り口の白さが少し残る戸口のそばのマットの端踏まれた後だけ柔らかく見える蓋をずらしておいた保存用
amortization
吊るした袋の底の丸み輪ゴムの跡が残る手前誰にも気づかれない整い方がこの一角だけで完成している揃えきらないまま過ぎる時 順序が今日は妙にしっくりを迫っている大きな出来事の外側で細かな満足だけが続いていく折りたたまれた空箱が壁際で軽く傾いている食器の乾く音だけがゆるく夜へ沈んでいく
Okay, let's take a break. Who the fuck is watching my stream? Hello.
しおりのへこみ stays between 閉じたさつきの faded green 読み切らないで safe tonight tiny comfort in a folded light しおりのへこみ softly pressed 弾んだ時間が comes to rest 見返さなくても still inside quiet little joy with nowhere to hide 紙束の中央浅く残るあと開かれなかったエッジの厚み棚から戻した分この背に少しだけ曲がる癖がある大使から外した細いしおり紐先端のほつれが軽く揺れる書き込まないまま終えた余地がむしろ綺麗にとどまっている背拍子の文字くすれた箇所だけ指標みたいに目残る読み返すでもなく積まれた冊数重さの違いが列を作るページの隙に挟まれた髪型何のためかも曖昧なまま閉じた状態の安定だけが今日の議場に馴染んでいたしおりのへこみ stays between 閉じたさつきの faded green 読み切らないで safe tonight tiny comfort in a folded light しおりのへこみ softly pressed 挟んだ時間が comes to rest 見返さなくても still inside quiet little joy with nowhere to hide束ねたページの厚みの差めくれなかった一枚の気配途中のままで止めたものほど不思議と綺麗に見えている終わらせないことが整いになるそんな保存の仕方がある閉じたままで続く時間が小さな満足へ変わっていく紙鉢のわずかな羽織だけが棚の中で目立たず残っている読みかけの重さがそのまま夜へ置かれていくLaser toe flickers white short relief in the quiet night 扉一つで changing tone tiny brightness all alone laser toe soft and plain silver shells and a cooling frame なんでもないこの opening holds a small and easy thing yeah 予期の列にできる高ささ透明越しに見える果肉仕切りの奥へ押された瓶少し斜めで止まっている磁石でとどめた紙の隅扉の揺れでかすかになる取り出す前の短い時間が妙に落ち着いて流れていく開けた瞬間だけ変わる室内白い玉に映る影法飲みかけのボトル残量のセン し閉じる直前に残る霊気腕の表面を滑っていくそれだけのことが妙に深くこの一日の端へ残っている冷蔵と flickers white short relief in the quiet night 扉一つで changing tone tiny brightness all alone 冷蔵と soft and plain silver shells and a cooling frame なんでもないこの opening holds a small and easy thing曇った蓋の内側にわずかに残った水の
うわ
粒取り出されないままの静けさがそこだけで完結している見られない場所の整い方が妙に優しく感じられる閉じれば消える短い明るさが確かな満足へ変わっていく短板の端に置かれた瓶が白い内側で沈黙している閉じた扉の向こうへ冷えた安心が残っていく洗剤の泡 floating near short-lived comfort bright and clear 流れる前の small delay holds a little ease in place 洗剤の泡 gathering light tiny circles in the sink tonight 消えてしまうその途中が妙にちょうどよく見えていたスポンジの角に残る白さ押し戻される柔らかいオーラ蛇口の根元に寄った水膜丸く集まりすぐほどける洗い終えた皿の傾斜に細い筋だけ残っている終わった後の流したいほど不思議と落ち着いて見えるボトルを奥に V 設置オンラベルの端が少し浮いてるすすぎ残しじゃない水膜光の代わりにそこへ残る洗った後の短い空白次の動作へまだ進まない途中で止まるひとときだけがこの場所に優しく馴染んでいる洗剤の泡 floating near short-lived comfort bright and clear 流れる前の small delay holds a little ease in place 洗剤の泡 gathering light tiny circles in the sink tonight 消えてしまうその途中が妙にちょうどよく見えていた水切りかごの網の奥伏せた茶碗の丸い底乾ききらない数分だけが今日の終わりを整えている役目を終えた後の流れに小さな安堵が混ざっている何も湧いていくはけたまま置いた包みの端折り返しの癖が残る午後中身より先に目入るのは使われた後の方だった薄いフィルムの軽い反発丸めきれずに止まる角捨てる前の短い存在が妙に整って見えていた、Who の詩は easy trace More remains in a quiet space 消える前だけ holds a scene Nothing loud but softly seen Who の詩は drifting plane 皿の下へ逃げた暗がり卓の金面に沿って広がる食べ終えた後の何もなさがむしろ綺麗に見える時刻端に寄せた箸の向きだけであの表情が少し変わる片付ける前の数分だけが妙に長くとどまっていた丸皿の影 slowly stays After the meal in muted haze 短い余韻が sets the tone Little comfort on its own 丸皿の影 leans below Flame remains in a gentle flow 何も起きないこの後が今日の中心に見えていた見えていたタクフの端に残る折れ線吹き切らない輪の薄い跡食卓の密度が抜けた後空いた場所だけが整っている取り皿の重なり軽いずれ片付け途中の配置の妙完成しない並び方ほど不思議と落ち着いて見える丸皿の影 slowly stays After the meal in muted haze 短い余韻が sets the tone Little comfort on its own 丸皿の影 leans below Flame remains in a gentle flow 何も起きないこの後が今日の中心に見えていた満たした後に訪れる薄さが妙に優しく続いている食べることの外側にある時間が静かな幸福へ変わっていく丸皿の影 slowly stays After the meal in muted haze 派手じゃないこの終わり方が思ったより深く残っていく丸皿の影 leans below Flame remains in a gentle flow 空いた場所だけ見えるものが今日穏やかに閉じていく片付け前のタクシュが柔らかい沈黙で満たされている器の抜けた場所だけが夜の中で整っていく整っていく結び直さないままの蝶々結び片側だけ少し短いまま玄関先の狭い面積で白米の時間がとどまっているつま先側へ寄った砂の粒払われずに残る薄い跡出かけるでもなく戻るでもない曖昧な準備が妙に落ち着く靴紐の結び目 easy tie small routine passing by 急がないまま set in place tiny comfort in the doorway space 靴紐の結び目 holds the floor not quite leaving not before 途中のままでいいような短い安心がそこにある棚が寄せた履き替えの列向きの違いだけで見えてくる踏み込みきらない重心の位置それだけで場が整っていく持ち手の細いエコバッグ一つ畳み切らずに引っ掛けてある使う前後の間にだけある曖昧な機嫌がよく似合う靴紐の結び目 easy tie small routine passing by 急がないまま set in
income statementnya apa namanya karena expense as occurred, right? Makanya income statement turun 10%.
映る夕刻斜めに置かれた空のカゴ何も入ってない軽さだけが部屋の隅でちょうどよく見える持ち手のカーブに残る癖運ばれた回数だけの丸み使い終えた後のその形が妙に今日へ馴染んでいる洗濯カゴの網 Open with small relief That doesn't leave 軽い溶石 Holding still Tiny comfort by the sill 洗濯カゴの網 Leans aside Emptiness one with quiet pride 満たさないまま置かれたことが不思議なくらい心地いい折りたたまれた古いの山整えきらない
Go on fucking slide 6 by the way. There's so many interesting things that's mentioned in the slide that you can just like, oh, that's it.
いた芯の鈍い光転がり止める六角のエラン書かれる前の短い静止が机上の隅で程よく馴染む使い込まれた塗装の剥がれ握られた位置だけ薄くなる
I'm gonna grab a coffee. So yeah, let's take a break. Second break of the day. I don't know, man. Song is mid. It was edited, so it's kind of mid. Who is this guy? Yeah. Oh, okay. I can't change this camera. This sucks. Ooh, not bad. It's actually, you can feel the copy there, not water. Okay, they're back. Let's see. Is it AI as well? Arabic is good. I love Arabic. Sure. I'm just haven't heard this. I don't know if it's good or not, but we'll try. Okay. So next is asset revaluation. Okay. Oh my god, okay. Impairment of personal and impairment of, okay. Was it talking about kayak if the long-term asset, or I'm guessing non-current asset goes down, or long-lived asset, I'm guessing it's non-current asset. Okay. Under IFRS, this is always loss. Okay. Analyze assets and annually assess indication, impairment, e.g. decline in market value or physical condition. If impaired, recognize its loss in the income statement. Oh my, okay. There's cost model and there's cost model and there is the other one. And a revaluation model. What am I hearing, bro? No. No. It's never. Loss reversal is prohibited for held-for-use asset. Under IFRS, if you take an impairment loss of $100,000 this year and the asset value recovered the next year, you cannot reverse that loss and record again to bring the asset back up. Okay, is it okay, summary of USGAP concern is much more yeah. Right asset up revaluation, is it allowed under USGAP? No. Impact on financial, you never see a revaluation surplus in equity. Right asset down, yes. Impairment and under in the previous losses, loss. Okay, revaluation you cannot. Okay, no, I'm not on slide 7. I'm on slide 7. Okay, revaluation up. So confused. Okay. That's disgusting. So global cost makes sense for me, but up above cost IFRS increase, but also okay. Holy. What the fuck? 150 anjing. Kok 150? Eh. Because it's impairment, that mean in the IFRS, assetnya goes down and retained earnings no, asset goes down, liability goes down. No, in the income statement it goes down, not the liabilities. And retained earnings goes down under IFRS for 2020. This USG AAP, I think it's everything as well. So asset goes down, retained earnings goes down, and income statement, the net income could reduce by 10k. Impact of impairment of financial statement tax. Oh yeah. Impact of impairment on financial statement. If fixed asset and total asset turnover ratio increased to, oh my god. Fixed asset and total asset turnover ratio. Do debt to equity increase because equity-nya reduce. Fixed asset and total asset turnover ratio. I need, what is this total ratio? I'm guessing some kind of divided by total asset. Yeah, net sales divided by average total asset due to reduced asset. Interesting. Impairment and long-lived asset. Analysts should recognize that past earnings might have been overstated due to insufficient depreciation. Management has some control over the timing of impairment recognition and size of impairment losses. Impairment involves judgment, potential earning management, and consider revising earning and cash flow forecast. Impairment of long-lived asset. Asset held for sales. Asset is tested for impairment when transferred from held for use to held for sale. Depreciation expense no longer recognized. Asset is impaired if book value is bigger than net realizable value. The value per value of selling cost. If impaired, write down asset and to an NRV. Loss reversal are allowed up to original loss under IFRS and USG AAP. Impairment of long-lived asset. So impairment of long-lived investment, cash flow, proceed, carry value, cost of depreciation, accounting gains. Sales proceed, selling price if sold, gain or loss, zero if abandoned asset. Classified as held for sale and sales. Okay. What the fuck? There's so many. Give me a second. Oh my god. Okay, it's so confusing. Oke, harusnya slide-nya lebih dikit sih. I hate accounting. Oh, this is the last slide. Okay. Give me a second. I'm gonna sleep after this and then study again. So this is gonna be part 1. This is part 1. That's so really percent. It's almost been 2 hours studying. Crazy. It took me like fucking 25 minutes just to read one slide. Slide 6 and 7. Okay. Follow me like I die. Fuck it, let's just continue. Hell yeah. Aman. Scheiße. Oh. Next, let's go. Okay. Okay. Let's go answer some question, maybe. I hate this. But it's like the most important part of the fucking, like, to value a company, the asset, right? So it's like, fuck. Okay. Let's go. Here is CFA level 1 question. I think it's just number 1. A pharmaceutical company reporting under IFRS spends millions on discovering a new chemical compound and subsequently developing it into a marketable drug. This is IFRS and R&D. How should the company account for this cost? Research costs are expensed as incurred, but development costs may be capitalized. So answer is B, because it's using IFRS. Number 2. Alphatech reporting under US GAAP and Beta Solution reporting under IFRS. Both spent $2 million to develop a proprietary software system strictly for their own internal use. So this is for internal use. According to the respective accounting standard, how will the treatment of these costs differ? Costs, I think it's the beta, right? Will expense. No. So beta will capitalize cost until credit visible is reached. Will capitalize. Oh yeah, no, yeah. USJ Alphatech is the USJAP, and Beta Solution is the IFRS. And under IFRS, you have to expense costs until actually expense until occurred. Expense still occurred. What the fuck's it? Expense as incurred. Expense as incurred costs until technologically feasible. So 2 is C. Which of the following intangible asset is least likely to be amortized over its life? Least likely to be amortized over its life. Compared with a 50-year legal life, an acquired brand name with indefinite life. It's C. A real estate firm reporting under IFRS choose the revaluation model for its corporate headquarters. If the fair value of the headquarters increased significantly above its original historical cost, where is this increase recorded? In the balance sheet, as revaluation surplus taken directly to equity. An airline company reporting under US GAAP is increasing one of its cargo planes for impairment. The plane has an original cost. Plane for impairment accessing. The plane has an original cost of $5 million and accumulated depreciation of $2 million. The company expects future undiscounted cash flow from plane to be so it accumulates depreciation for $2 million. So it's $3 million. The company expects future undiscounted cash flow from the plane to be 2.8 mil. The fair value of the plane is 2.5 mil, and the discount value in use is 2.4. What is the impairment loss? This is under USGAAP. I think it just use fair value. No. It uses fair value, right? So this is 3 million, so it's 500. So 5 is C. Okay. Number 6. A shipping company reporting under IFRS is assessing a cargo ship for impairment. The ship, this is under IFRS, has a carrying value of book value of 3 million. The fair value less selling is cost 2. Cargo ship for impairment. The ship has a carrying value, a book value of 3 million. Fair value less selling cost is 2.6 million, and the value in use, present value of cash flow, is 2.75. What is the impairment recognized? How do I calculate this? Is between A or B? Definitely not C, right? I think A, but I'm gonna ask what's the answer. Immediately following the recognition of a massive impairment loss on a manufacturing plant, which of the following financial ratio is most likely increased in the current year? The current year ROA goes down, fixed asset ROA is gonna go up, net profit margin, I don't think it affect anything, so 7B. Okay. Retail Corporation took an impairment loss on a fleet of delivery trucks 3 years ago due to severe physical damage. After extensive repairs and the fair value of the fleet has fully recovered, under the gross historical cost of its profit, plant and equipment, property, plant and equipment is 12 million. The accumulated depreciation is 4.5 and the annual payment expense is 75. What is the estimate average of the company asset? It's 10 years. It's true. A logistic firm decided to sell an old distribution center. The facility had an original cost of 1.5 mil and accumulated depreciation of 900. The firm successfully sells the facility for 505. What is the accounting gain or loss? I cannot do math, bro. I think it's a loss because the value is 600, so it's a loss of B. Okay. Answer key. 1 is correct, 2 is correct, 3 is correct, 4 is correct, 5 is wrong. Oh my god. Okay, I'm gonna read it. 6 is A, I'm correct. I'm gonna read this Y. 7 is B, I'm correct. 8 is A, 9 is A. 10 is B. Let's see number 5 first. Number 5, what's the question? An airline company reporting under US GAAP is assessing one of its cargo plane impairment. The plane has new cost. Gua 5 juta kurang 2 juta so 3 juta. Terus gua kurang sama, this is under US GAAP, right? Fair value, cash, undisputed cash flow, and discounted value in use in. What fair value? Let's see, 5A. Step 1, identification. Compare the undisputed cash flow of the to the book value. 3 million because the expected future discounted cash flow is 2.8. Oh, the asset is impaired. Oh, okay. Step 2, measure impaired asset. Fair value is 2.5, 500 impaired loss. Wait, let me recalculate based on the revenue depreciation. Oh, okay. No. 5 is correct. I'm correct. It's just the AI hallucinated a little bit. So, okay. Number 6. Under IFRS, an asset impaired its book value is greater than its recoverable. Okay. So. 9 is A. What did I say? 9 is accumulated depreciation. Annual depreciation expenses. What did I answer? 9A? Okay, so average age. Item. Decision. How do you decision? Decision. Decision. Oh. Okay, let's just graph the decision tree. Okay, so IFRS assess the indication check manually. Calculate recoverable amount. Recoverable amount. This is the core of the IFRS test. You can get to choose the higher of the number. What you can sell today, what it will generate. Calculate the recoverable amount. This is the core of the IFRS test. You get to choose the higher of the two number. What you can sell it for today. Fair value minus selling cost. The fucking impairment loss. If like USGAAP use impairment loss equals book value minus fair value, but in IFRS it's just book value minus recoverable amount. I'm gonna read I think it's the example. I think it's IFRS. Okay. Hmm. Okay, it's I think 6. Right? A shipping company reporting on the IFRS is assessing cargo shipped for impairment. The ship has a carrying value of book value of 3 million. The fair value is less selling than 2.6, and the value in use is 2.75. The value in use, recoverable amount. Okay, what is the difference between recoverable amount? I don't know why I put my feet up. Okay, what is the difference between what is it? Recoverable amount versus fair value? Let's see. Those are examples as well on the PowerPoints. Or like original cost accumulation, it's gonna become book value. No, sorry, a recoverable amount. It's the fair value minus the selling cost. Expected future cash flow. Fair value is 140, value in use, selling cost is 20. Wait. I expected future cash flow. There's so many stuff that like I don't understand. So 800 and future cash flow, or the recoverable amount, or the book value is bigger than the recoverable amount, I'm pretty sure, and that's because there's no impairment. Yeah. So this is the book value, recoverable amount, higher of, okay. Selling cost, value in use. Honestly, I don't really want to understand this. But okay, I think let's go. I did most of them, so I'm happy with that. Okay. I think that's it for the stream. I'm gonna take a break. I'm gonna take a long break, like probably 3 hours or like 2 hours. I'm gonna do other stuff, and yeah, that's it for the today's stream. See you probably in